This is the Asia Trade. I'm Paul Allen in Sydney.
I'm Haidi Stroud-Watts. Well, breaking news, President Trump says he's agreed to a 2-week ceasefire with Iran, suspending his threats to attack civilian infrastructure across the country. According to Trump, the deal hinges on Tehran reopening the Strait of Hormuz, the announcement coming just a little under an hour ahead of a deadline for Iran to reopen the waterway or face a wave of military strikes.
WTI extending its slide after his comments, while the yen gained against the dollar. US futures also getting a boost. For more, let's get to our Washington and White House correspondent Jeff Mason, also senior editor for markets and Bloomberg opinion columnist John Authors. Jeff, I want to start with you. Can you tell us what more we know about the details of this deal? And most critically, is the Strait of Hormuz going to reopen?
Well, that last part is the big question, and Paul, and I think that there aren't a whole lot more details. The president likes to be his own spokesperson, his own communications director, his own chief of staff, and he did all of those things by putting that announcement out on his Truth Social platform. The key question, of course, is what does it mean that it's contingent on the reopening of the Strait of Hormuz? That has been one of the biggest problems for the United States and for the rest of the world as a result of this war that was launched more than 5 weeks ago now, I think, if I've got my math right. And the president has given mixed signals about whether he would be willing to walk away from this war without that being open. Now he's made clear that at least temporarily, for this temporary ceasefire, which he said would be a ceasefire on both sides, that he requires that to be open. Haven't heard Iran's, at least public reaction to that yet, but it is a win in many ways for both sides that the president is not going to follow through on the threat that he had said he would do by 8 o'clock Eastern time tonight.
Jeff, just as you were saying that, we're getting reporting from the New York Times saying that Iran has accepted Pakistan's ceasefire proposal. It did seem like there was sort of more meat and more back and forth between the sides when it comes to these negotiations, right? What do you make of this acceptance? And then also, Trump has spoken about a two-sided ceasefire. You would assume that to be the case, but let's not forget, we also wonder how Israel is feeling about this.
Indeed, and this is a war that Israel and the United States, of course, launched together, so that is a key thing. And yet, I would, my suspicion is that Israel isn't going to come out and contradict President Trump when he says that he's agreed to this ceasefire. But indeed, there are still some questions that are open, and if Iran, as the New York Times is reporting, has agreed to it, that also would be logical for the fact that the president posted what he did. He probably wouldn't have done that if he wasn't pretty confident that both sides were going to agree to that deal. Big news either way, as I said before, because the threats were certainly very high coming from the White House, coming from this president, as to what the United States was prepared to do if they did not agree to this deal. Also, I think important, though, to underscore that this is a temporary deal, even though the president talked about a longer-term one being in the works. He said that there was a 10-point plan that Iran has proposed to the U.S., and he seemed pretty positive about that. But as we all know, it takes time to agree a longer-term deal. He's created some time for that now with this two-week ceasefire.
Yeah, the detail of that Pakistan offer was a 2-week reopening of the Strait of Hormuz as an act of goodwill, and we are seeing WTI now down 15%, $96.03 a barrel, so a big move there. John, what can we expect to see today in terms of markets repricing?
Well, I have to say, as I'm learning this myself, like you, I've learned this since I've come on air. I did a column about a week ago saying that we'd moved on from Tucko, Trump always chickens out, to the critical question being Waco, will the Ayatollahs chicken out? The likely answer being no, that there appeared to be minimal reason for Iran to go along with a deal like this. If this is true, then this is very surprising for all kinds of people I've been talking to about the oil market for the last few weeks, and you would expect the big falls in oil prices to continue. If they've really agreed to a ceasefire and are allowing the traffic to flow through the Strait of Hormuz for the next 2 weeks as well, then they're basically allowing the Americans to get all their troops thoroughly into position for an eventual ground offensive while also completely releasing their economic leverage for 2 weeks and allowing people to rebuild their oil stocks and get ready for a longer term campaign. So if this is true, this is the Ayatollahs chickening out, as I put it, and you can expect the expectations, compared to the expectations as I perceive them talking to people in the market, this will mean oil comes down a lot and equities will boom. If this all stands up, I have to admit I'm very surprised by this, but it would appear to be true. So if this stands up, then much cheaper oil, much higher equities in the next 24 hours.
John, I don't think anyone would blame you or anyone else that's been following this story in these markets to be skeptical at this point. But just to reiterate, we do have the reporting from the New York Times saying that Iran has accepted Pakistan's 2-week ceasefire proposal, that's citing 3 Iranian officials. The ceasefire, according to this report, was approved by Iran's new supreme leader. So, John, we have seen a level of complacency in these markets, right? At least when it comes to some risk assets, for equities, for example. So how big do you think the relief is going to be? And I guess how much scarring could there be given just the whipsaw trading that we've seen over the last few weeks, almost 6 weeks?
Well, first of all, just without using the jokey acronyms, if Iran is doing this, that's what really matters. They're the ones with agency in this situation, and if they are releasing their hold on Hormuz even for 2 weeks, that's a huge deal. That's what really mattered. I do think the lesson from previous geopolitical shocks is that they tend to create buying opportunities. People have learned that lesson multiple times over the last, basically throughout the last 50 years since the Yom Kippur War was the last time an incident like this created a true bear market and a recession. And that is why you haven't had as big a correction in equities as you might expect. There is definitely some expectation that something like this would happen in prices, which would limit how much prices will rebound. And I think it's very possible that the degree of scarring, as you put it, to supply chains, given that this has gone on for 5 weeks already, is probably underappreciated by the markets. But the bottom line remains, if this really is a true ceasefire involving both sides, involving an open strait for 2 weeks, then you can only imagine that this will be more like, for example, Saddam Hussein's invasion of Kuwait in 1990 into 91, where you saw a 20% sell-off that was completely reversed by the time Saddam had been booted out of Kuwait about 6-7 months later. It's very unusual for a shock to have that neat a start and an end point, but if that's really what we're going to have, I would imagine that will be the model for what happens this time.
I want to get back to Jeff Mason as well, our Washington White House correspondent. Jeff, when we stand back and look at this, what has been achieved exactly over the past few weeks?
Well, the president would say, and did say again today, that he has achieved a great deal, that the United States, in fact, has achieved a great deal in terms of the military strikes against Iran. He hasn't declared victory per se, but he has been on a little bit of a victory lap for the last week, including the primetime address he made last Wednesday night from the White House, in which he declared that the war would conclude in 2 to 3 weeks. But he's also given mixed signals, really from the very start of this war, about what he wanted and about what he would require to end the conflict. And tonight, you still have some of those mixed signals, although one of them is perhaps a little clearer now with regard to the Strait of Hormuz. There was a lot of ambiguity about that last week. I think he would say, and he did say again, I believe in his announcement tonight, that there has been regime change, even though he's given mixed signals on whether or not that's what he was really looking for. And even though the evidence would suggest that there hasn't been regime change, given that the Ayatollahs are still in charge, just a different one from the one who was killed at the very beginning of this war. That's a long way of saying, Paul, that the president certainly sees this as so far a major success. And yet, not everyone agrees with that, and there are even some within conservative circles in the United States who are fearful that he has started this war and is going to get out of it too soon before they, in this case the United States, has accomplished everything that they could with this military conflict.
At the same time, you've even got conservative voices backing Democratic voices to exercise the 25th Amendment to remove the president, right? It's unlikely this is going to gain traction, but is it just one, I guess, way of viewing the different types of pressure the president is under at the moment to find an off-ramp?
And just to be clear, the 25th Amendment of the Constitution would be a way for the cabinet to essentially try to remove the president from office. That's not going to happen. But there are, yes, frustrations within both Republican and certainly Democratic circles about the language that he has used over the last 24 hours about Iran, about civilization and the Stone Ages. It's been very bombastic and very, very threatening. And that has led some to question his mental acuity and his thinking about all of this. I will say, as a correspondent who's covered him since his first term, that it is not unusual for the president to use that kind of language. That said, it's also not something to be downplayed. And I think people did take it seriously. And yet tonight he has backed away from it insofar as he has said he's going to hold off for 2 weeks before carrying through with that threat, if he carries through with it again at all.
Our Bloomberg Washington and White House correspondent Jeff Mason and our Bloomberg opinion columnist John Authers on that breaking news. Let's get to the market reaction now. Our Bloomberg market editor David Inglis is with us, and we've seen the sort of backing away from the very incendiary language that we've seen from President Trump. How do markets sort of react to this, given some were kind of presuming there would be a taco trade anyway?
That is true. That is true. I mean, there was a corner of the market that I guess in many ways, I think you look at how equities, yes, fell, but did hold up, that there was going to be some folding going into this deadline. But I guess just looking at the market reaction right now, not to the extent that we did see now from both sides, and looking at the various reporting coming through following the Truth Social post. You have, of course, you guys talked about the CNN Axios reporting now that those talks will be taking place, I believe, in Pakistan towards the end of this week. So just in terms of market reaction, it's a good one. It's a good one across the board. It's looking like Asian equities are going to see a massive leg higher today. Some of the initial pricing, Samsung is a very good example, trading, in fact, right now. Substantial volumes coming through there. Nikkei futures are up over 2,000 points. So translating that into percentage gains, we're talking 3 to 4%, likely, possibly a gap higher at the cash market open in Tokyo in about 15 minutes from now. On the currency side of things, the dollar is down. It's not just down, it's down against everything right now. And certainly the currencies that are leading the strength right now are some of the risk, some of the currencies more tied to trade and risk. The Aussie dollar is actually the outperforming G10 currency right now. You put that together with the Aussie and the yen, which is also a very good proxy of risk appetite right now. That's also, there we go on your screens, headed substantially to the upside. Oil, and as you guys have been showing there, we've not just taken out 100, we're now at 95 on West Texas. And I'm just looking just across the futures curve on West Texas. The declines are really being led by the front-end contracts, which, by the way, I should also mention, did lead also most of the gains to the upside. So a lot of that is being unwound as we speak. We are at session lows. We're down to about $18 on West Texas. So do expect Brent to mirror this. I think we closed just shy of 110. I would not be surprised if we immediately took out $100 to the downside on Brent when that set of contracts comes online. VIX futures are down. Treasury futures are also pointing to yields falling at the cash market open today. So suffice to say, that's just a long-winded way of saying that markets are taking this one well, I wouldn't say well in stride, but very, very well. Just a note out of Nomura. They put out their initial reaction minutes after the Truth Social post, and perhaps, I'm not sure if it's dated, but certainly still one to watch because we certainly need to see evidence and proof that the conditions have been met, that the extension of the risk rally we're seeing right now hinges on the reopening of the Strait of Hormuz. I think to the point that John Authors just made a few minutes back, the agency is really also on the part of Iran. And we're also getting more lines coming through. In fact, let me just bring them to you because I have just a couple of screens open here. That Iran did say that safe passage via the Hormuz is possible. It's possible for 2 weeks. But yes, that's what we know so far, and markets are set to rally substantially. Risk assets. Paul, I'll send it back to you.
All right, Bloomberg markets editor David Inglaze there in Hong Kong. As David mentioned there, Iran confirming that there will be safe passage via Hormuz possible for the next 2 weeks. Now, our coverage of the Iran war continues here on the Asia Trade. Red 6 International and CSIS will be joining us to discuss what might come next as President Trump extends his deadline. Plus, we'll be talking commodities with the Commonwealth Bank of Australia after US attacks on Iran's main oil export facility. That was, of course, prior to the announcement of this 2-week ceasefire. This is Bloomberg. Let's take a look at WTI prices. Big move there, down more than 15.5% now. So we're looking at $94.95 a barrel at the moment. And this is on the news of not just that ceasefire announcement, but a response from Iran saying that safe passage via the Strait of Hormuz will be possible for 2 weeks. So a big decline in the oil price there. For more on the state of energy markets, let's get to Bloomberg oil and shipping reporter Wei Lun soon. So Wei Lun, can you give us a sense of what's sitting in the Strait at the moment ready to move, how much can be moved in 2 weeks, and what happens after 2 weeks? How difficult is this going to make futures pricing?
Right, so Paul, we are looking at a trickle of vessels just before what Iran has just said. And before the war, we have seen an average of 135 vessels passing through the strait in and out. So we're looking at about also a fifth of the world's oil and energy going through the strait. And all that has come down during the war. And so Iran's proposal to allow safe passage, according to Tehran, for 2 weeks certainly will have an impact on whatever energy flows through the strait. But ultimately, what goes beyond the 2 weeks, and also in the first place, if ship owners are having that confidence to take Iran at their word, remains to be seen. But this is definitely a big development from what we've just seen over the past few minutes.
And we have seen that scramble from ship owners and business owners trying to reroute a lot of the way that these vessels pass through and where they're going to go, right? Do you think there is going to be an element of sort of delayed or scarring to supply chains as we again potentially adjust to a different reality?
Right, and it's definitely, we have seen in the past 1 month or so, a lot of those supply chains, as you mentioned, have been shifting. It's easy, it's quick. I wouldn't say it's easy, but it's shipping and oil trading can actually shift supply chains pretty quickly. But I think the bigger question now is we do see oil prices coming down, but also the shipping traffic through Hormuz is another key indicator to look at. And the longer that traffic doesn't go through Hormuz, the more long-lasting impact we have on oil production within the Gulf itself. Because so far, only Saudi Arabia and the United Arab Emirates have been able to divert some of those flows outside of Hormuz. We have Iraq, we have Kuwait, big producers inside the Gulf, still unable to properly export their oil out.
Wayland, just pause for a moment. We're getting more lines from Iran saying it is in talks. Talks with the US will start on Friday, but it also says talks with the US don't necessarily mean an end to the war. So, yeah, to your point, signalling potential future volatility ahead. But certainly in the next couple of weeks, where it appears safe passage through the Strait of Hormuz is assured, which markets are going to feel this increased supply of oil most keenly?
So Asian markets will be the biggest beneficiaries, as they have been the biggest, the ones to have lost the most so far, because a lot of those Middle Eastern crude actually flows to Asia, to India, to China, to Japan and Korea, where there are big refiners turning that crude into really good usable products, such as gasoline, diesel, kerosene, jet fuel. So if we do manage to see a lot of that crude tankers manage to go through, we will expect to see a bigger uptick from Asian refiners who have been scrambling to find alternative resources.
We're also hearing again from the Islamic Republic of Iran broadcasting saying that Iran will engage in these talks with the US with, quote, complete distrust. And there's probably a level of distrust or a fear from a number of economies, right, who have in the last 5 to 6 weeks found themselves in the throes of dealing with energy crises. Do you think if this war comes to an end, what happens to the alternative sources of energy that have come up in the meantime? The higher purchases from Venezuela, the allowance of shipments from Russia, for example, even more drilling on the US side from US shale. Will they kind of be removed from the calculation, or will they continue?
So what we have seen is a bit of a stopgap measure from the Treasury Department, from the US, right? Like giving carve-outs, waivers for previously sensitive or sanctioned oil from Russia and Iran. And India has been picking up some of those barrels. So that sort of eased the pressure. But that is already only for oil and water. Those coming out from the producers in Russia and Iran are still sanctioned. So that's one point that we have to bear in mind. And the other thing is Asian refiners, they are built to take heavy crude, and some of those that come from the Middle East and also Venezuela. So it's hard for them to switch quickly to whatever that the US producers are exporting. So for now, Asia is still struggling to get those barrels. And if we do see an easing of these tensions, those crude can manage to flow again. The market should expect to go back to what it was like pre-war, but that will take some time.
A Bloomberg oil and shipping reporter, Wayland Sun, there as we continue to really monitor what has been a changing situation over the past hour or so, and risk assets are frantically trying to reprice this potential new reality. If you take a look in particular at S&P 500 futures, that sort of euphoria rising 2%, that pop in the Asian session, pretty rare to be seen, really showing that pent-up demand that we've had investors wanting to get back into risk assets and stocks after several weeks of these war conditions. But when it comes to what we've heard, President Trump agreeing to a 2-week Iran ceasefire plan to continue those talks. We've also heard from the Iranian side there as well, saying that these talks will be held in Islamabad, that there is complete distrust when it comes to how they're engaging in these talks, and the talks won't mean an end to the war, but that they will get underway on Friday. We are also seeing that tumbling when it comes to oil prices on that announcement as well. We'll wait for that Brent pricing to open, but that should be a pretty big gap judging by what we're seeing in WTI pricing. More ahead on the Asia trade. This is Bloomberg.
Take a look at Korean stocks rallying sharply in tech and autos. Some of those names moving very strongly. SK Hynix up 9.6%. Hanmi Semiconductor more than 11%. So a little bit of a taste of what might be to come when we get to the market open later. More ahead on the Asia trade. This is Bloomberg. Let's recap the breaking news for you. President Trump has agreed to a 2-week ceasefire with Iran, suspending his threats to attack civilian infrastructure across the country. According to Trump, the deal hinges on Tehran opening the Strait of Hormuz, which Haidi appears to be happening.
appears to be happening, but it's quite interesting if you take a look at Iran's response. I guess the fact that there was a response with that 10-point plan is really what markets need to know in terms of sufficient detail and actually two-way engagement, right, which we haven't taken for granted over the past few weeks. But they're saying the passage via the Hormuz Strait is possible for 2 weeks, that these talks will begin on Friday. They'll be taking place in Islamabad, but there is a fair degree of uncertainty. They're saying that if the attacks are halted, they will cease defense operations, but also that they're approaching these talks with complete distrust that these talks with the US won't mean an end to the war. So there's a fair degree still of uncertainty as we proceed. But let's bring in, for some analysis on this breaking news, Kirsten Fontenrose is a president at advisory consulting firm Red 6 International. She previously served as a senior director for Gulf Affairs at the US National Security Council. So, Kirsten, we clearly have to take this as positive progress, right? How cautious are you about this? And I guess how surprised are you that this is what we've come to after what has been an extraordinary string of communications from the president?
We should be very cautious because both sides of this potential agreement are saying they'll be monitoring the other side for these next 2 weeks. So this is not a done deal. If Iran does open the strait and the US does call off all strikes, Israel has said it would also call off strikes for these 2 weeks, then you're off to a better start. But both will be watching the other side like hawks for any indication that the ceasefire has been violated, and then you can expect them to start again. It's somewhat surprising after the President of the United States' rhetoric, but when you consider the fact that the comments coming out of Washington have said the military objectives have been achieved, those objectives were making sure the nuclear program was non-revivable in the near to medium term, there would be no missile and drone program, and that the Navy would be destroyed, those have been achieved. By and large, the U.S. was ahead of its schedule in ploddingly achieving those through searching for launchers, taking out bunkers, and the like. There's still more that could be done bit by bit if they chose, but for the most part, they assess that Iran no longer poses a threat to its neighbors in the same way, or to Israel, and certainly not to the U.S. So if this agreement opens the strait, ends the blockade, the international community wins, you know, it could be good for everyone, but we'll see how long it lasts and whether it sticks.
It's interesting. I mean, the issue of the enriched uranium remains one that's not dealt with, and President Trump has sort of gone back and forth as to whether he's still interested or if it's possible to still be thinking about doing that. On Iran's side, they've previously called for reparations for the war as well. So is the best case scenario that we see both sides sort of taking a step back from what's on their wish lists?
Both sides are taking a slight step back. For instance, you mentioned those that, you know, President Trump hasn't pushed about the uranium at the moment, although he did say that this 10-point plan isn't something the U.S. has agreed to. He just said it makes a good basis for negotiation. So a lot will happen over these 2 weeks. And again, that's how we'll decide if it sticks. One thing you saw Iran walk back from was they had demanded essentially war reparations from the U.S. You know, you have to come rebuild Iran, which was 100% a non-starter. And Iran was told that by their neighbors and knew it themselves. So they've now done an about-face on that and said, we would instead like to charge tolls for the strait, which will be debated.
All right, that is Kirsten Fontenrose. We seem to be having a little bit of difficulty with her audio at the moment. We'll try to get it back. But just to recap for you, we do have an agreement of sorts. President Trump saying this is a two-way ceasefire, although it will include Israel as well, Haidi. But most critically, an agreement to reopen the Strait of Hormuz, at least temporarily for 2 weeks.
Yeah, there's still ongoing reporting at the moment. UAE Air Defense is currently dealing with missile drone attacks coming from Iran, even as we hear more details about this. On the one hand, there's sort of some flexibility. Iran saying that they've allocated 2 weeks for peace negotiations, but that period of talks can be extended by mutual agreement. But Paul, when it comes to the reopen of Hormuz, this is interesting. That full statement from the foreign minister saying that reopening, the safe passage, would be possible via coordination with Iran's armed forces due consideration of technical limitations. It sounds like they are giving themselves a bit of wiggle room in terms of how well these talks go. Therefore will be kind of the point as to whether vessels will be able to get through.
Also, information out of Iran has been patchy at best, difficult at worst, and one can imagine that after such a sustained bombing campaign that perhaps communications within the country is not all that it could be. So that could be potentially the reason for that disclaimer in the statement from Iran about technical limitations and potential ceasefire breaches. But we are still seeing, as you mentioned, air defences in the region still dealing with missile and drone attacks coming from Iran. So that's another feature of this war, is that Iran has attempted to broaden it out into a regional conflict. The UAE has in fact endured more strikes than Israel during this conflict. So one imagines this has been very well received by Gulf states as well.
The Gulf states have been under such immense pressure, right? And there's, I think, a bigger conversation to be had. We've talked a little bit about the scarring from prolonged inflationary pressures, the scarring on supply chains, the sort of trauma, I guess, to national psyches in terms of, do we need to continue conversations about energy security, food security, given the uncertainty across this region? And I do wonder, when it comes to Gulf states, the appeal of some of these places as international financial hubs, tourism destinations, how quickly that can recover as well.
Yeah, Gulf states had also gone to tremendous lengths to engage diplomatically with the regime prior to this conflict. One wonders what that relationship is going to look like going forwards. I mean, Oman in particular often tried to act as a mediator between Iran and its opponents, and Oman got hit with missiles and drone strikes for its troubles. So, Iran says it's coming to these talks with the United States from a place of total distrust. I imagine the sentiment is very similar for Gulf states as well, after a lot of their outreach was rebuffed in such a violent way. Some of the images that we saw in the lead up to this ceasefire agreement as well were quite disturbing. For example, images of Iran lining up civilians on bridges and around critical infrastructure like power plants as well. Any evidence of the population rising up against the regime, as President Trump hoped in the very early days of this conflict, that does not seem to have materialized.
Well, as you've made the point before, there may be a very healthy sentiment for uprising and unhappiness with the regime, but that's very hard to sort of consolidate and bring to fruition when there are foreign bombs being dropped over your head, right, as well. But you spoke about the role of the Gulf states being intermediaries. It'll be very interesting to see that role being played by Pakistan, just given how little in the way of direct communications we've had between the US and Iran over the years. So much more to watch and much more ahead here on the Asia Trade. This is Bloomberg.
Right, it's going to be an interesting session this Wednesday in the Asia Pacific. Let's take a look at how futures are pricing at the moment. We've got Nikkei futures pointing higher by, it looks like 4.6%. S&P futures also better by 2.2%. But ahead of the open in Korea, look at that screen on the right. Some huge moves being anticipated here in early trading. SK Hynix up by more than 9%. Hanmi Semiconductor up by more than 12%. Hyundai Motors also catching a bid, not on the board there. Korean Airlines also pushing higher as well. So it's going to be a firmly risk-on session. The price of oil going through the floor. WTI down 16% at the moment, Heidi.
Yeah, it's really unusual to see the US futures to see quite such a pop. So it kind of gives to some of the exuberance. What's kind of interesting to me is that the downside has been sort of fairly limited, I guess, as the war has dragged on, I guess, because there has been an assumption from at least some parts of the investment community that President Trump would back down at some point, but it looks like that upside is a little bit more outsized, if you will. Outsized will also, as you, I think, mentioned, that gap that we might see when Brent comes online as well there. We are also hearing reports that a US defense official has said that the ceasefire is in force. The US has suspended strikes in Iran, but the White House, according to this report from Axios, saying that the US is expecting it may take some time for orders to get down to the lower ranks of the Iranian forces there as well. So this potentially why we're continuing to see, signs of action and missile action there, even as this ceasefire has been agreed upon in principle. We have been hearing that the US military has paused strikes for its part inside Iran. We also heard, Paul, that Israel at this point is also bound to this ceasefire, which of course has been the sort of other missing component of how potentially Israel, Benjamin Netanyahu's administration feels about this. Let's bring back our guest, Kirsten Fontenrose, Strategic Advisor at Systems Planning and Analysis. She previously served as a Senior Director for Gulf Affairs at the US National Security Council. Kirsten, really great to have you back with us, and apologies for some of those technical glitches that we had earlier. So we were talking about just the deep level of uncertainty, right? And you're looking at the wording around the reopening of the Strait of Hormuz, and it does look like Iran is keeping some wiggle room there. You think we should expect to see further volatility before any kind of longer-lasting peace can be, cautiously agreed upon?
I think we should definitely expect some volatility just because there is no trust between not just the U.S. and Iran, but Iran and any of its neighbors who will be sending ships through, and the U.S. and China and Russia, who've blocked a recent UN Security Council draft resolution on forcing Iran to open. So there's just mistrust on all sides. But if Iran does open that and we see all flagged ships, not simply those of countries they have already, prior to today, agreed to allow through, actually move through, then that will be a sign to the U.S. that they are willing to stick by their word, at least for these 2 weeks. And then we should expect Iran to be watching the U.S. and Israel in terms of their promise not to strike for the next 2 weeks as well. Both sides monitoring one another.
Kirsten, help us understand how far along the road we are here since before this conflict began, because you mentioned earlier that Iran's nuclear capability has been degraded, yes, but it still has its uranium. The regime is still there. In military parlance, could the US and Israel find themselves having to go back to mow the grass, as it were, and conduct another operation down the track?
You could find them thinking that they need to conduct another operation. I see two scenarios for that. One would be if they felt it was necessary to grab the enriched material, which might not qualify as a strike. The second would be if they saw motion from the sky, if satellite imagery told us that Iran was rebuilding those facilities or attempting to rebuild those facilities, then yes, you might see a strike. What I think you will definitely see is debate inside Iran about whether or not now is the time to race toward a weapon because they've been challenged on it. And you might see a hardline faction of the remnants of the regime saying, we need to grab that weapon now. That would not necessarily cause either side to strike, but that intent, that political intent, does indicate, high level of monitoring is necessary, and you would definitely see those plans being prepped. Then it would be in Iran's court about whether or not they chose to go through with that, which would then invite strikes on that program.
And this is something I was discussing with Haidi earlier as well. What about the future of Iran's relationship with its Gulf neighbours? Because there was an uneasy trust before this conflict began. I think it would be fair to say, after all the missile strikes on the UAE, Oman, Qatar, Bahrain, Abu Dhabi, that trust is surely gone.
Oh, absolutely. And don't forget Kuwait, where they struck 3 different desalination plants, if you want to talk about war crimes. So these Gulf neighbours have had it. They are absolutely done with trusting Iran, with the exception of Oman, which is now involved with Iran on this potential revenue sharing arrangement that they are proposing would allow traffic to come long term through the Strait of Hormuz, but would be taxed and that revenue would be shared. That will be pushed back. The international community will not like that, because the strait is different than a canal, which is sovereign territory. So the international community will say that Iran has no right to tax ships that go through there according to the UN Convention on the Law of the Sea. But Oman has a different relationship. Their foreign policy has always been friend to all, and they try to really ride that rail carefully. But you will see some other countries saying, hey, Oman, this is not being a friend to us. So expect debates about that. But in terms of the UAE, Saudi, Bahrain, for the most part, Kuwait, you have definitely going to see a movement away. These sort of cold peace arrangements they had, these mutual respects among their intelligence community, I think you'll see that's quite over. And between the UAE and Iran specifically, expect to see, I think, a lot more covert cyber activity aimed at one another and the like. They are only 100 kilometers apart across a very narrow waterway. So this will definitely be a relationship to watch because it will be hostile.
Kirsten, before we let you go, a couple of things kind of to throw things forward. Do you think the fighting between Israel and Iran's proxies will continue? Lebanon has obviously been that big hotspot. And the other is, I think when we spoke to you last year, in the middle of the year, you'd said the US hadn't actively gone into conflict because they wanted to keep the door open on nuclear talks. Do you think that possibility is still there?
Iran is asking to have any full end of the war agreement incorporate Lebanon, as well as places like Iraq and Yemen. That is not going to be accepted wholesale because there's the rest of the region and the U.S. and Israel will say those proxies aren't a state and they don't get to be at the table. And we're certainly not simply going to walk away from their hostile activity and allow these countries to go the way of Iranian influence without challenging that whatsoever. There are demand signals from so much of those countries, whether it is Iraq, whether it is the current government of Lebanon, or whether it is half the government of Iraq or the existing government in Yemen. None of them want this Iranian influence, so you won't have them supporting that idea either. But Israel will make up its own mind on its own front. I don't think it will allow Iran to dictate whether or not it fights on its own borders.
Kirsten, really great to have you. As always, Kirsten Fontenrose, Strategic Advisor at Systems Planning and Analysis. And we are really looking ahead to a very sort of bullish sentiment underpinning the start of trading here in Asia over the next hour. We're seeing net oil importers, I should say, in particular, Japan, South Korea, really positioned for some major relief rallies in this Wednesday session. That threat of immediate escalation on Iran from the US receding. Markets potentially even starting to price in the prospect of sustained ceasefire, sustained cessation of hostilities, and dare I say it, peace. Of course, so much remains uncertain, but expect to see that positive sentiment play out, in particular as we see the big drop in oil. That big gap will be seen when Brent comes trading online as well, and a 2% plus pop when it comes to S&P 500 futures in Asia. That's a really unusual thing to see and kind of speaks to just the optimism here. Let's bring in for the view on FX and rates as well, our chief correspondent for those assets in Asia. Ruth Carson is in Singapore. Is this an everything rally against the dollar right now? It is all down to these peace hopes.
Absolutely. It is an everything rally, except for the dollar, except for oil. So we're seeing, bonds getting bid, bond futures, as well as everything from the Australian dollar through to emerging market currencies. And it really, really underscores that hope, that optimism that people are pinning down to the fact that perhaps we are going to see an end to the war finally. Now, how sustainable that is up for debate. But remember, we've seen a lot of these assets getting hammered, over the past 6 weeks. So it's no wonder that we are seeing this big retracement now against the dollar, against oil.
Ruth, in terms of the everything rally, we've got Treasury futures appear to be rallying as well, stock futures too. What's the direction of travel for yields today?
Yeah, so it's important to also remember who the members of, the market participants are when it comes to trading. And you've got algos who are reacting to this. You've also got, long-only investors and hedge funds, and they're all taking positions here. But what is clear is that bonds have been sold off, in particular, be it Treasuries, JGBs, emerging market rates. All of them have come under pressure on inflation fears. Now, some of that is getting unwound right now, even as I speak, and we're seeing Treasury futures bid, bond futures bid. How long is a piece of string, though, as to how sustainable this rally is? Let's see, because all it could take is perhaps another negative headline to see some of that steam come off.
We're also seeing that buying spree really across assets, as you say, other than the dollar, other than the retracement. We're seeing more than a retracement in oil. But this is a playbook that has gone to and fro before. There's a lot of risky positioning here.
Yeah, absolutely. Because positioning has been skewed heavily towards the dollar, for example, bullish dollar positions, now we're seeing this big snapback. Aussie dollar, New Zealand dollar, for example, really surging more than 1%, and we're just hours into the trading day. Now, all this has room to extend arguably into the Europe and New York session. But again, if we see some sort of retracement or cooling of sentiment, be it from, the US side or Iran, that will definitely dent sentiment again. So very much still, in many aspects, headline to headline trading, lots of risks out there.
Ruth, we've got a couple of rate decisions today as well. One of them, the Reserve Bank of India, we are expecting a hold there, but of course India very exposed to all these, earthquakes in the energy market. Is that expected to change the picture at all around what we hear from the RBI today?
So economists are expecting the RBI to keep rates on hold. Obviously, it's very tenuous times, not just for India, but a lot of high beta currencies and bond markets out there, and India is no exception. They are a huge importer of oil, very much tied to what's happening in the Middle East. So all eyes on the rupee in particular. But yes, the expectation is that rates will stay on hold. We know the RBI has been very active when it comes to defending the rupee, so it will be a litmus test later today. But you can definitely assume, it will be safe to assume, I would say, that authorities will be quite happy with what they're seeing in the Middle East so far in terms of the easing of tensions. It definitely does sort of ease selling pressure on the rupee.
All right, Chief Correspondent for FX and Rates in Asia, Ruth Carson, thank you. We have more ahead on the Asia trade. This is Bloomberg.
Take a look at what we're expecting when it comes to bullish sentiment underpinning the start of Asian trading this Wednesday as we get that sigh of relief across most asset classes, of course, in particular the downside seen as the dollar, as some of these Asia trades come roaring back to life, as well as oil. That big plunge in New York traded oil, 15%. We're going to see a big move when it comes to Brent coming online, as well as Asian equities, in particular these major oil importers, crude importers and LNG importers, the likes of Japan and South Korea will be really paramount at the start of this session. We're also getting some details in terms of who is going to be attending these ceasefire talks as well. We're hearing Steve Witkoff, United States Special Envoy to the Middle East. That's unsurprising. Also Jared Kushner, the President Trump's son-in-law, who has sort of emerged as something of an unofficial peace envoy over the past few months as well. Also getting updates in terms of Kuwait, saying air defences are currently intercepting hostile targets, missiles and drones as well. Market opens, it'll be an eventful one in Sydney, Seoul and Tokyo next.
Well, this is the Asia trade, and we are counting down to Asia's major market opens. And what an open it's likely to be, Heidi, on the back of this news. Yeah, it will be big. So a 2-week ceasefire. Iran has agreed to it, the Strait of Hormuz to reopen. But comes with a few asterisks.
It does. We still continue to see, obviously, there's still operations on the ground, or in the sky, I should say. Perhaps some communications need to kind of be realigned, but there seems to be a broad willingness from both sides, as you say, lots of caveats, complete distrust from the Iranian side. The US also staying mum on exactly how these talks will proceed, but there does seem to be a willingness, and a willingness potentially to extend beyond the 2 weeks if required. We are really watching in terms of these opens. Japan, South Korea, these major oil importers, of course, also major LNG exporters as well. But we are expecting to see that big pop at the open. It is going to be for Asian markets a combination of things, not just that big nosedive when it comes to crude prices prices in WTI down by 15%. We're expecting that big move in Brent as well, but also that lower dollar background as well after so much relentless pressure on US currencies. That dollar sell-off, or the repricing, if you will, also provide that nice support for US markets there as well. Perhaps not so much for the yen, a little bit of respite there, but still needs a move from the BOJ for more of a sustained move in the yen. Traders could potentially revert to shorting the yen again against G10 peers. That's been a strategy that's been quite popular ongoing. Let's take a look at the view when it comes to Korea at the moment. We are, of course, seeing quite a lot of the tech moves there as well at plays, but really Samsung we continue to watch. That's just about 5% I should say, away from reversing all the declines. So that's one major heavyweight to watch there as well. But this is a picture for the Kospi. We're seeing a pop of just about 6%. And Paul, with a couple of exceptions, we are just seeing that relief rally really sweep the region.
Right, let's take a look at Brent, which is just open for trade, and we're seeing a very big move here, as you might expect. Brent crude slipping more than 15%, $92.80 a barrel at the moment. So on this news that the Strait of Hormuz will be reopened for 2 weeks. Take a look at some of the movements in treasuries as well. Not quite as pronounced there, but still worth noting. The 10-year last traded at a yield of 4.29%, now 4.2576. The 2-year yield also slipping a little to 3.72. Yeah, that big move in Brent underscoring the news of the day. The S&P futures also showing some pretty modest gains, better by 2.2%. Here in Australia, we're also higher by about 2.8%. All right, let's get more on all of this. Bring it down Washington, our White House correspondent, Jeff Mason. So, Jeff, we have a ceasefire. We have a Strait of Hormuz reopening for 2 weeks. What are the chances that this gets extended? What are the chances that we're right back where we were at the end of 2 weeks?
You know what, Paul, if I knew the answer to that question, I'd be a brilliant man. I don't know. But certainly it's a good sign that they're moving in that direction, a good sign for people who want a deal. And the fact that the president said tonight that the Iranians had proposed a 10-point plan and spoke sort of positively about that in his Truth Social post would suggest that he's optimistic about a deal. But I also think it's important to underscore, and this is sort of present in your question as well, that President Trump changes his mind a lot. And things could happen in the next week or two, or days or hours, that upend this entire deal. But for now, it's the first time in a more than 5-week war that both sides have agreed to a ceasefire, and that is creating, or is designed anyway, to create some breathing room for a longer-term peace plan.
How much breathing room does this give the president? Because that domestic pressure, whether political or economic, in a midterms year was really building.
It certainly was. And, I think it's interesting to see the market reaction. The president really likes to talk about the fact that he's seen some records, in terms of stock market highs during his second term. He also, before this war, was very fond of claiming credit for having brought gasoline prices lower in the United States. And, of course, the war in Iran has completely upended that and taken that argument away from him. He has promised that as soon as the war is over, that all of those things will come back. So we'll see if gasoline prices start to drop as a result of this new development. Then that is something that I'm pretty confident he'll claim credit for. But to your broader question, the deadline in terms of politics in this country is the November election. And what he needs to have breathing room for is space between now and then for the economy to be doing better, for inflation and prices to come down, including gasoline prices, and to see whether or not Americans have long memories about their feelings about this war, if in fact it concludes in the coming weeks.
Yeah, Jeff, to your point, when the dust settles on this conflict and we look back on it, what can we say was achieved?
Well, I think that depends entirely on who you ask. And the president's answer to that, insofar as he's answered it in some cases already, is the United States and Israel managed to destroy a good chunk of the Iranian's military program. They took out the former supreme leader or Ayatollah. The president is calling that regime change, though his son succeeded him, so many experts would question whether that's actual regime change. And many experts would also question whether they've really had the impact on the nuclear program in Iran and Iran's ability to pursue a nuclear weapon that they wanted. So plenty of outstanding questions, but I would say from the White House's perspective, or certainly from the U.S. Commander-in-Chief's perspective, the military has performed well and achieved a lot of the military objectives that they set out to achieve.
All right, Bloomberg, Washington and White House correspondent Jeff Mason there. Let's take a look at how stocks are tracking at the moment. Unsurprisingly, we're seeing a pretty strong risk-on rally at the moment. Looking at Nikkei futures at the moment, better by 5%, but the Kospi charging ahead. Some of those big names like SK Hynix, Samsung having very strong performances. Here in Australia, better by 2.5%. Gold miners having a moment. It's only really the energy sector that's weaker right now. Qantas, the airline, among the top performing stocks today as well, on the news of this 2-week ceasefire and the reopening of the Strait of Hormuz for 2 weeks as well. Well, let's get to Katy Kaminski now, Chief Research Strategist and Portfolio Manager at AlphaSimplex Group. Katy, certainly been a very eventful morning. Have you seen enough to make you think, hey, it's risk on again?
Definitely in terms of the market moves, we are seeing risk on. This is what we were anticipating. You saw little hints of it last week, but I think having something more concrete today and having an actual plan and ceasefire has caused quite a move in the markets. You're seeing it across all asset classes, including fixed income, bonds. You also see the dollar weakening on this. And of course, the biggest move of all today is energy prices. So big moves.
Yeah, let's talk about those energy prices. As you say, we're looking at Brent and WTI off to the tune of about 15% each. Do you have a sense of where the floor might be for energy prices, how long it's going to take to get there? And have the events of the past few weeks going to mean a bit of a reordering of how the world thinks about energy?
I would definitely agree, because if you look across the curve for energies and you look at where energy prices are farther out in the curve in terms of delivery later in the year, you were seeing prices down as low as 80. Those are probably adjusting as well as simultaneously today, but it will take time. And I think one of the challenges with energies is they don't, even though they can adjust in price, supply chains are complex, and sort of sorting this out will take a lot more time than, say, how the equity market may think about this. So I think from our side, we've seen a lot of volatility in energies. We've seen positions consolidating, and I think sort of the end of sort of a really big trend, assuming that we don't see a re-escalation at some point. So I think looking across the curve in the future and how that is changing can give some indications.
There's been a lot more positive sentiment when it comes to potentially looking for a place to hide in Chinese assets, right? Do you think some of these trends continue even with a short to medium term resolution or a pause to hostilities?
Yes, I think, especially if you look in Asia as a region as a whole, it has definitely taken, anywhere from 8 to 10% of a drawdown based on this recent move. And a lot of that has to do with the fact that many of these countries are net importers of energy. So the potential disruption of that is clear. As you see some resolution, coupled with China also having some slightly better data more recently, you would definitely think that there could be buying opportunities, particularly in China, that doesn't have the inflation concerns that you see in Japan or, say, Australia. So I do think there may be some relative interesting moves in China in relative terms.
And I think to the point of, a broader kind of rethinking around energy security, again, around supply chains, it feels like a little bit like the conversations we were having around pandemic times. But what do you think are sort of structurally longer term themes? LNG consumption, for example, and then what sort of trades would be associated with that, with or without the conflict?
Well, I think, what's concerning about this type of move and this type of oil shock is that oil shocks generally are followed by inflation increases, which also weaken consumers. That has a negative impact on growth. And I think this is borne out in history in any sort of past geopolitical conflict that we've seen as well. So I think that is going to cause, I think we're all re-evaluating. There are just not a lot of ways to change energy dependence that quickly. And we're just reminded again of how incredibly vulnerable markets are to energy spikes and geopolitical tensions.
Katy, great to have you with us. Katy Kaminski, who's a Chief Research Strategist at AlphaSimplex Group. That sort of vulnerability being pushed aside, at least for this session. If you take a look at what markets are doing at the moment, in particular, these major oil importers, Korea, Japan, stocks in those markets are kind of going all in at this point when it comes to positivity and enthusiasm for this ceasefire deal. Close to 5% for the Nikkei 225, the Kospi up by over 5%. We've also got heavyweights like Samsung to contend with there as well. Looking at trading volumes as well to take a look at really gauging how much of the real funds are flowing back into stocks. We've also got the supportive backdrop of a reversal for US dollar supremacy as well. Some of that strength coming back into Asian currencies will be helping that outlook, in addition to the big fall that we've seen in oil prices so far this morning. But watching for turnover in particular for markets like the Kospi, looking like one of the busiest days this year, potentially back to before this war even started. More ahead on the Asia trade. This is Bloomberg. Take a look at this broad market reaction. We are seeing equities so far just about 10-15 minutes or so into the start of trading. The MSCI Asia Pacific up by close to 3% there. We're seeing strong upside when it comes to trading in Korean and Japanese stocks, with some pretty high turnover and volumes being seen as well. Brent crude, we're seeing that downside of just about 15%. There was a big gap when it comes to trading with WTI, which also sees that big dip there as well. On the upside, we are also seeing spot gold rising on the back of the US Iran agreeing to this ceasefire arrangement there. We're also seeing a bit of a pullback when it comes to the US dollar, as well as some strength for Asian currencies. Don't forget, it is also central bank decision day as well for the RBNZ and the Central Bank of India as well. So the RBI also meeting. Of course, that has been one economy that's been hard hit by both the energy supply story, but also the situation with the rupee as well. Let's get back to our top story with Mona Yacoubian, who's a senior advisor of the Middle East program at the Center for Strategic and International Studies. Mona, first off, just give me your kind of first reaction to this ceasefire. Are you hopeful, optimistic? Are you cautious as to how this is going to play out?
Well, very cautious, but also hopeful that we're not where we feared we could be, which was really falling into the abyss of uncontrolled escalation. Things were really, looking pretty serious, pretty dire in terms of where the conflict could go. And so in that regard, of course, this is a welcome reprieve. But I think a lot is going to have to be, learned in the 24 hours, because really both the U.S. and Iran are spinning this in a way and sort of calling victory, and yet there are some significant differences. And the one that I would point out that is most significant is the Iranians saying they will allow free passage for the next 2 weeks through the Strait of Hormuz, but in coordination with Iran's armed forces. If the U.S. agrees to that, that is a huge concession to Iran.
There's a lot of uncertainty. Some of it is also around what happens with the Iranian proxies as well, right? There was a statement saying that Lebanon would be part of this. How easy is it going to be to negotiate the proxy activity into such a deal? And how aligned would Israel be in terms of the cessation of hostilities?
Well, the word coming out of the White House this evening is that the Israelis are absolutely respecting this ceasefire. However, I've heard no mention of Lebanon, and so it could well be that Lebanon is on its own trajectory, and it would frankly surprise me significantly if the Israelis stand down on their offensive in Lebanon. So my fear is that will continue. I think what we may have avoided in the short term is the possibility of other proxies, namely the Houthis, getting involved. And there was concern that if the escalation continued on the path that it was on, you could see the Houthis jump in and work to block the Bab el-Mandeb Strait, the other key choke point in the region there. And that would have had an even more significant effect on energy market disruption.
Mona, ahead of this conflict, the president encouraged the people of Iran to rise up against the regime, saying they'd have no better chance than this. Well, has there been any evidence of that happening, or do you feel like the theocracy now is more embedded than ever?
No sign of popular uprising, quite the contrary. I think we're seeing the Iranians undertake additional executions, continue to use coercion, and frankly, some of the rhetoric and the attacks on Iranian civilian infrastructure has had a galvanizing effect, where you're seeing almost a rallying around the flag in Iran against these attacks. In terms of leadership changes in Iran, you're absolutely right. I mean, we've gone from Ayatollah Khamenei to Ayatollah Khamenei, the son of the previous supreme leader. I think what's notable is that, if anything, the assessments are that this regime in Iran, this rump regime, is even more hardline than its predecessor, and that actually it's the the Islamic Revolutionary Guard Corps that has even more power than was the case before February 28th.
Now, you also noted that the UAE suffered more bombardment than Israel during this war. What's the future of Iran's relationship with its neighbors?
Very bleak. Whatever bit of trust and détente that had gone on amongst the Gulf countries and Iran is all but shattered. Certainly with the United Arab Emirates, which, as you rightly note, has really borne the brunt of Iranian retaliatory strikes. We've seen the Saudis, the Qataris, the Kuwaitis, the Bahrainis, all of them express their utter disgust, quite frankly, with Iran's tactics. The one standout is Oman, which has maintained more of a mediating position, interestingly enough, including with respect to the Strait of Hormuz, where there's been some discussion with Iran and the Omanis to look to see whether there's a way of jointly supervising the strait. What this current ceasefire means for those early arrangements, none of which had actually been agreed to, is an open question.
It's interesting at this point, just after the last round of attacks last year, the operations, we were talking about the sort of reluctance of the US to enter full conflict because they wanted to keep an open window for nuclear conversations. Depending on how these ceasefire talks go, do you think those talks are still a possibility? And I do wonder the idea of even these conversations between the US and Iran, which have had very, very few conversations and negotiations over the past few years.
It's an open question. I mean, the Iranians are claiming in some of the statements issued by the Supreme National Security Council of Iran regarding this ceasefire that Iran will retain the right to enrichment, which of course would be go against what the United States has been demanding, which is zero enrichment. And so, to be honest, the depth of distrust between the United States and Iran is significant, and it's hard to see how the two countries move forward and actually address these long-standing issues, which still remain outstanding. The Iranians are also demanding that sanctions be lifted, and they're even calling for reparations. So there's going to be, I think, a lot to unpack in the coming hours. And of course, the next 2 weeks, in a way, are an eternity with respect to how this conflict has proceeded.
I do wonder about the sort of soft power projection of this, right? Because the way that this war has been engaged, certainly the way that the US president has been communicating, particularly over the last sort of 48 hours, has been pretty astonishing and I think disturbing from some people, right, in terms of the language and the threats that have been made. On the other hand, you have seen almost an acerbic take from the Iranian diplomatic side as well. Where does this leave to you the reputation of the US alliance within the region, particularly as we also consider the damage that's been suffered by the Gulf states?
Well, look, I think the United States has taken a hit in terms of its soft power projections, certainly with respect to some of the statements that President Trump has made with respect to Iran and going after an entire civilization, et cetera. More importantly, I mean, there's polling that's been done by the Arab Barometer, a polling group that's run out of Princeton University, that's showing that U.S. standing in the Middle East has really plummeted, certainly following the war in Gaza, and now I think as well with respect to this current conflict with Iran. And then there's, of course, where the Gulf publics are deeply, deeply concerned about where this war is headed. Of course, no love for Iran and a lot of anger toward Iran. But I think, some are asking questions about what does the U.S. security guarantee actually mean, and what is the future of this region? What will be the future role for Iran? How will the Gulf countries manage in the face of, if there is the regime still standing in Iran, and one that perhaps even retains control over the Strait of Hormuz?
Yeah, Mona, to your point about the future, where do you place the odds of Iran getting a nuclear weapon down the track? Because pretty much every fear that the theocracy had came true over the past 5 weeks. Surely the motivation now is stronger than ever to acquire a nuclear deterrent.
There's no question that there is certainly a logic to the idea that the regime, if left to its devices, if it retains control over those 400 kilograms of highly enriched uranium, one could see that they could indeed sprint to some sort of crude nuclear device as the only way to ensure deterrence. They perhaps look to North Korea as the exemplar, perhaps the path that they should have opted for earlier, that if they had had a nuclear capability, they would not have been attacked multiple times by Israel and by the United States. And so, yes, I think that's going to bear very, very close watching in the coming months.
All right, Mona Yacoubian, Senior Advisor of the Middle East Program at CSIS. Thank you so much for your time today. Let's take a look at some of the major energy names around the Asia Pacific. We're seeing a rare bit of red on the screen here. The oil price, of course, sinking through the floor today, although off session lows. Brent narrowly lower by 13.2%, 94.82 a barrel. But you see some of the big names there. Woodside Energy, a big mover here in Australia, off by 9.7%. Santos also weaker by 5.5%. Inpex S-Oil also low. The energy sector in Australia more broadly off by more than 7%, but otherwise it is a risk-on day. More ahead on the Asia trade. This is Bloomberg.
No doubt about it, we are expecting to see really global stocks rally in line with that first reaction we see out of Asian equities at the moment, with that lower oil price, significantly lower oil price, I should say, even though as we're coming off those session lows at the moment, we're also seeing that pullback when it comes to the US dollar strength as well. Euro Stoxx 50 futures seeing that pop of almost 5%, close to 5% higher when it comes to German DAX futures there as well, and that's a reaction in trading with the euro and the dollar. So all of this reacting to that relief of at least that 2-week ceasefire talks.
Let's take a look at Brent prices at the moment, sitting pretty much bang on $95 a barrel, a little bit under that. We are, in fact, off session lows. We were down 15% at one point. Now we're weaker by about 13%. And that is, of course, on the news that broke earlier this morning. There will be a 2-week ceasefire, including the US, Israel and Iran. The Strait of Hormuz also to be opened for 2 weeks, Iran confirming that. So some relief for energy markets and a rally for risk assets as well. Well, the Ecuadorian president says he will not bring back a diesel subsidy in response to an increase in fuel prices. Daniel Noboa was speaking with Bloomberg's Anne-Marie Jourdain earlier.
We're starting to feel it. We have a system that is partially subsidized in terms of fuel cost, and it can only go up by a certain percentage every month, but it will catch up. I mean, this is the reality of the world, that we're an oil producing country, so that helps us also in terms of income that we needed.
The diesel fuel subsidy, though, was removed. Would you consider bringing that back?
No.
No, not on the table.
Not on the table.
And that was Ecuadorian President Daniel Noboa speaking with Bloomberg's Anne-Marie Jourdain. Well, joining us now is Vivek, Dhar, Head of Commodity and Sustainability Research at Commonwealth Bank of Australia. Vivek, thanks so much for joining us on a very busy morning. I'm just curious, how have you been updating your forecasts, various scenarios? Because if the experience of the US-Iran war has taught us anything, it's volatile.
No, absolutely. It has certainly been a very busy morning. I think the way that we're trying to approach this is that this 2-week ceasefire is probably part of something which is a broader, comprehensive, substantive agreement. And the question is now, in the next 2 weeks, what kind of details will we see? Like, we have already had 15-point plans and 10-point plans showed to us. And there look to be certain divisions already between, what are the interests of Israel, the US, and Iran. And so now the question is, the whole detail of this plan is now under scrutiny. And I think as we get more clarity, as we kind of see what can they agree on, I think markets will shift lower with that confidence. But it is going to be very tricky, because I think the reason that Iran is even in a position to negotiate right now is they would be looking for some significant concessions given the leverage they currently have. And I think there is going to be some serious discussions about how viable that is, not just for Israel in the region, but the Gulf partners, which I think is going to be really critical to unpack in the next week.
So as it stands, we've got the Strait of Hormuz open for 2 weeks. Everybody is hoping that it is longer than that. But considering 135 ships per day would transit the strait under normal circumstances, how long could we expect it to be before we see traffic get back to normal levels? How much of a backlog is there?
So look, I think the promising part is there's a lot in inventory. So I think the physical side will probably take like a week to almost think about normalizing port loading. But then the question will be, how will the shut-in operations come back to normal? And that is something that ranges depending on the asset. We could be talking, I think Kuwait put it out there that it took 3 to 4 months for their oil field. And the question here is what kind of damage is done? And I think we're going to get more clarity on that as well. So on the one side, I think there's going to be a geopolitical premium that will ease as we get more details and some idea that a deal can be reached. But on the other side, the landing spot will depend on what kind of sustained damage we've seen. So I think on oil, I think that has seen, upstream oil at least, has seen the least damage amongst the different energy vectors. But where premiums can probably be more entrenched, when we look at it over the next kind of 2 months, it's probably going to be in the middle distillates and as well as LNG, because the damage we've seen across refineries and gas and LNG assets in the Persian Gulf has been significant. So that's how we're trying to look at it right now. But yeah, it's a very early reaction to something that's just happened.
Markets are notoriously sort of short-lived in their memories, right, of disruptions like this. But do you think this gives way to a broader conversation about energy security, some of these bypasses that we've seen and alternative sources?
Oh, look, I think absolutely. I think if the 70s was any lesson in terms of how markets diversified, like Europe was a good example, going down nuclear, and even looking at Russian gas as options post what we saw with disruptions in the 70s in oil markets. I think you'll have very similar conversations around the world right now about how do we bypass these issues, these choke points in global markets. And I think the pipeline build out and trying to reduce your risk, I think certainly that will gain traction. I think the East-West pipeline and its surge capacity, hitting its capacity of 7 million barrels a day, has really been a success story for Saudi. But I can see a number of Gulf countries looking for those bypass routes. And I think Qatar particularly will be looking at something like that, given just how bound they were with the Strait of Hormuz.
Gold has been an interesting one. We're clearly seeing the relief rally include gold and precious metals today, but we're still down, what, about 10% from the start of the war? That's a pretty meaningful discount. Do you think there are structural issues at play there, or does it depend on how much this situation improves and whether it can sort of have implications for the central banks as well?
Yeah, look, I think the key part to consider here is, you know, the US dollar weakness, and what we've seen initially, we've seen that big sharp rebound, you know, in the last couple of hours. But when we look at it in terms of what will shape it, is how does near-term inflation expectations change? And if we start seeing that reduce, and therefore the idea of lower rates, I think that will then be another bullish tailwind for gold. So I think it has more upside to go, but I think markets are still reacting and digesting. But you know, we are still going to go through a physical issue with oil and LNG, and I think the market has to absorb that first. So I think there's a bit of a lag before gold gets that tailwind. But certainly that's probably the thing to look out for. But certainly I think gold has all the ingredients to keep rising and well above where we are now. You know, we had concerns about a $6,000 an ounce target by the end of this year. If everything plays out and we see this lead into a broader comprehensive agreement, we think that has more reality just off the bat.
Vivek, one statistic we've heard often during this conflict is that 20% of the world's oil goes through the Strait of Hormuz. Obviously, that means 80% doesn't. Considering the rather bruising experience that the world has just been through, do you anticipate a meaningful reordering of energy supply chains, or do you think the memory of this conflict will start to fade fairly quickly?
Look, it's a great question, because on top of secure supply chains, there's also a view of the transition and how quickly can we go there and get, you know, almost independence from fossil fuels. I think there will be a more practical view of it, that this transition needs us to consider these supply chains more seriously. And I think there will be protections given to even aging assets, but needed assets in case we see something like this again. But it will definitely push that rollout into low carbon alternatives, and EVs is one option for me that I think is, like, all the upgrades are coming through in terms of EV sales, and I think that's certainly going to be part of the picture and part of the mandate of government to kind of reduce their reliance on these fossil fuel supply chains. But I think protection of what is existing is certainly going to be there, and that will mean protecting assets that may potentially be loss-making in this transition. But I think there'll be certainly a push to have that security, just as so we avoid these risks that we just saw with the Strait of Hormuz.
Vivek, really great to have you with us. Vivek Dhar, who's the head of commodity and sustainability research at CBA. Also watching Asian shippers as well. This is the picture as we see, mostly broadly downside when it comes to shipping companies around the region, as we expect potentially, or hope, this is what the markets are hoping, that the Strait of Hormuz may reopen. We have also seen quite a bit of upside for Asian shippers throughout the course of all this, as more contracts and orders come through for ships, given the level of destruction that we've seen. For more on Asian markets, how we're reacting to these 2-week ceasefire news, Bloomberg MLive strategist Mark Cranfield is with us now. Mark, it's quite interesting seeing just sort of the breadth of that diversity, the cross-nature asset of this rally so far. Does that differ to kind of previous relief rallies that we've seen over the past 6 weeks?
Yeah, this is a pretty spectacular one, even among some of the rallies that we've seen, as you say, recently. I mean, I think the extent of that you can see with the European equity futures. I mean, it's astonishing to see Eurostoxx futures up 5% in an Asian session, and that's really something we very, very rarely ever see. And the rally for French bond futures as well is absolutely huge. We don't. We're expecting it in Asia, of course. We expected the Kospi index. We expected Japanese stocks to have big rebounds. I'm sure we will see good moves in Hong Kong as well when that market reopens after the long weekend. But I don't think anybody was prepared for what they're seeing with the European markets. But it does, in a way, make some sense because Europe is extremely exposed to everything that's been going on in the Middle East, particularly the higher energy costs. So huge relief there. The euro also is having a pretty good session in the currency space as well, although the Aussie is way ahead of it, of course, as well. It will need, though, some details to come through. These kind of knee-jerk reactions are not unexpected, considering how bearish markets have been for several weeks. But investors will need to see things develop over the next couple of weeks. As those talks go on between the US and Iran, they'll need to see some flesh on this to be sure that oil is going to continue to flow freely, and that other things will be put back in place. And of course, there's the whole infrastructure situation as well. There's been so much damage to infrastructure that people need to know that that's going to be rebuilt as well. But certainly the early moves that you're seeing in Asia today just shows the extent of relief that investors have, that they can start to think again about the fundamentals that drive equity markets, whether it's earnings, economic data, central bank moves. Those things will gradually come back into the picture, and people can take a step back from just watching headlines related to Iran.
Yeah, Mark, in terms of sustainability of this relief rally, we do have to remember that this is a 2-week window in which there'll be a negotiation that involves President Trump, who is mercurial at best. What's the risk of a reversal?
High. Any time that we see the kind of reactions and the very fast responses that markets can make when there are negative headlines coming out from the United States or from anybody for that matter, but certainly in terms of the American president, he's very capable of disrupting markets with just a few words. So yes, investors will be on edge for that. But the bar has moved up slightly here. It's really, investors will be looking for the risk that there's any serious backtracking. They're going to assume that there are best intentions here, that people have come this far, and that there's going to be a negotiated process. You've got intermediary in the shape of Pakistan as well. So investors will be taking heart from that, the fact that there does appear to be some framework here for them to work in. It is not simply an ad hoc situation where people are coming together. So as long as there's no major backtracking, that will certainly help the mood in markets. But if we do get closer to the date and you get people like President Trump saying that, okay, this deal, there's nothing going on here, there's not going to be a deal, then markets will be very concerned. But at least for the next few days, it looks as though there'll be a sustainable mood here, which people will push markets higher. Don't forget, there's been very big retracements, particularly in equity markets, bond markets to some extent as well. And people will be looking at this as a relative value play. It's not just about what's being discussed at the moment. It's about what they missed out on over the past several weeks. Equity markets, especially in Asia, were in pretty good shape before this war started, and just getting back to that equilibrium they were at the early part of March is what people will be looking for.
All right, Bloomberg MLive strategist Mark Cranfield, thanks for your analysis. Mark did mention their Euro Stoxx futures. They have opened for trade, and they are bouncing very impressively as well, up by about 4.6%, either to the left or the right of that screen if you're looking at it. The euro also catching a bid, 116 at the moment, pretty much in everything rally as well. We've got French bond futures as well, jumping the most since mid-2023 as that oil price comes off those highs. Brent down about 13% at the moment.
Still a lot of growth and uncertainties when it comes to the economy at the moment as well, right? We've heard some warnings from the likes of the IMF, for example. We're going to get some more when it comes to how central banks are feeling about this, given we do have the RBNZ and the RBI decisions through the course of the day. More ahead on the Asia trade. This is Bloomberg. Well, the IMF is poised to cut its forecast for global growth as a result of the war in Iran. Managing Director Kristalina Georgieva says the conflict has triggered a negative supply shock that is driving prices higher, making attention to inflation a priority. The new figures will be released next week when the IMF and the World Bank host global policymakers in Washington. Well, those inflation concerns also pressuring countries here in the Asia-Pacific region. Of course, we're set to get central bank decisions from New Zealand and India in the next few hours. Both the RBNZ and RBI are expected to hold rates despite surging fuel prices. Our Bloomberg economics correspondent James McIntyre and our FX rates strategist David Finnerty joins us now. So, James, let's start off with RBNZ. The IMF obviously talking about the supply side challenges for a number of economies. How sticky are these, even if we have a temporary, potentially a permanent ceasefire?
Yeah, there's a major challenge for New Zealand's economy in terms of actually getting the physical molecules down, the actual supply from Asian refineries. There's no domestic refining there in that economy. It's solely reliant on fuel supplies coming through. So a ceasefire today, we've still got 6 weeks or so or the recent weeks of disruption coming through from Hormuz, all of the challenges through the Asian refining complex, and then what comes after. So there will be the bump that we've already got in the road. This 2 weeks will be a nice opportunity to see how quickly things can recover, but it's still going to be a long recovery, and a lot of uncertainty will linger no matter what happens.
So uncertainty obviously likely to be a theme from the RBNZ today, but what is the path of travel for rates for the rest of the year?
Yeah, so the RBNZ actually, Governor Brennan recently in a speech in late March gave us their roadmap, laid out the path that the RBNZ, or the response function for the RBNZ, and really they will be looking through this initial short-term shock and seeing what second round effects, if any, there are through to inflation. So there's going to be a long period of wait and see for New Zealand's economy on monetary policy. So it's likely to be at least the next 3 months staying on hold. We think that hold could stretch for much, much longer. We've got to really see confidence in supplies of diesel into the economy, fertiliser, also jet fuel. The big pillars of New Zealand's economy, agriculture and tourism, diesel heavy, jet fuel heavy, both of those are in very short supply around the world right now. Air New Zealand's already cutting flights, and there's more to come. The economic implications and ripples through of that are going to take quite some time for a recovery that's already stuttering.
David, we're just getting sort of more details around, the contours of what this agreement looks like and the potential reopening of the Strait of Hormuz, which is clearly what the markets will want to be seeing. We're now hearing that Iran and Oman will be allowed to charge for passage through the Strait of Hormuz. The 2-week ceasefire includes a plan that allows both Iran and Oman to charge fees on ships transiting through the strait, according to a regional official. This is according to reporting from the Associated Press. So, David, when it comes to some of these Asian economies that are pretty deeply afflicted by what's going on, India is one of them, both in terms of the energy shortage as well as the impact on the rupee. Is there anything that we're expecting from the Reserve Bank of India today to counter those concerns?
I think at the moment that they're expected to leave interest rates on hold. Obviously, the rupee has been in focus in the markets. It pushed down to 95, actually below 95 versus the dollar recently. And you saw the RBI come out with some new policies basically saying, OK, that we're going to cap open positions at 100 million. We're going to stop deliver NDFs. So basically try and stop speculation on the rupee. Now, obviously, today's developments will help the RBI. The timing couldn't be better for them. It is for decision day. The forward markets are indicating the rupee will open stronger, about 0.4, 0.5%. So that's good news for the RBI. At the end of the day, it's good news, but it doesn't quite solve the problem. If you look at oil prices, they're still, yes, they're below 100 at the moment, but they're still above 90. So the market will still be worried about how high will they remain elevated. But certainly for the near term, it takes some near-term pressure off the RBI. So they'll be expected to say, look, we're going to be on hold and we'll continue to monitor the scenario.
David, in terms of FX more broadly, I mean, we've seen a huge run-up in the greenback, the dollar spot index easing off a little bit now. Which currencies, particularly in Asia, could stand to be the beneficiary of a weakening dollar?
Yeah, certainly at the moment, the risk-sensitive as my colleague Mark Cranfield indicated, it's been definitely risk on today, and certainly in the equities, and that's transferring into the FX market. So the Aussie and Kiwi, certainly in Asia, are very risk-sensitive currencies. So with this risk on, they're certainly the main beneficiaries of this, particularly the Aussie dollar, because the RBA is in this tightening mode, shall we say. They were expected to tighten before the Iran war started. Obviously, that's fueled inflationary pressures. So at the moment, the idea, we are already expecting RBA to tighten. So therefore, that was all positive news for Aussie dollar. So look for that to outperform. But certainly, generally, it's just anything versus the dollar is up today, said with the risk currencies leading the way.
Bloomberg Economics economist James McIntyre and our Bloomberg FX rate strategist David Finnerty there joining us with the market take. This, of course, as central banks have been grappling over the past almost 6 weeks with this increasingly severe situation in the Middle East, and now this hopes of peace, or at least a temporary ceasefire talks, are driving markets much, much higher. More ahead on the Asia trade. This is Bloomberg. All right, take a look at what we're expecting to see as a continuation of this relief rally, and it is quite extraordinary. The price action, the volumes that we're seeing across the board at the moment, really quite different from previous iterations of some of the temporary relief rallies that we've seen over 6 weeks of what has been just whipsaw trading for markets through the course of this Middle East conflict. This 2-week ceasefire, the sort of cautious positivity that we're seeing from both sides, albeit a whole heap of caution, right? We do have Iran saying they're approaching these talks with, quote, complete distrust there. There's a big question over what happens to activities from Iranian proxies. We're hearing from Pakistan that Lebanon is included, but that's surely likely to be a point of contention there as well. But take a look at what we're going to see build on this pretty incredible rally we're seeing, in particular when it comes to the massive oil importers across the region like Japan and Korea. But we are seeing China futures, TAIEX futures looking like we'll see some optimism too.
Yeah, those oil import bills due to be falling for a while at least. We've seen some big retracement in the price of crude. Take a look at Brent crude, off 13%. It was off more than 15% at one stage, so 94.32 a barrel. So huge relief there on the news that the Strait of Hormuz will be open for 2 weeks. S&P futures also rallying by 2.25%, and the broader MSCI Asia Pacific also having a good day. So risk on as a ceasefire in the Strait of Hormuz seems to be in place for at least the next 2 weeks. That's it from the Asia trade. Markets coverage continues in a moment.